Last week, it was reported that Nigeria's economy has officially hit recession as its oil industry suffered under weak global prices. With lower oil prices, Nigeria has struggled to fund its budget aimed at preventing the recession. The country's gross domestic product, which is the GDP, has dropped by 2.06% in the second quarter of 2016. On Friday, the U.S. was expected to announce whether its decision on interest rates, which could see Nigeria's economy slumping even further. Joining us to discuss these issues is Maurice Madiba. He is the founding director of Cloud Atlas Investing. Maurice, good morning to you and welcome to Morning Live.
Thanks for having me.
Thank you very much indeed for your time. Now, I was reading an article on the situation in Nigeria, the economic part of it. Now, apparently the former governor of the Central Bank of Nigeria warned the government that the Nigeria would actually dip into recession.
Yeah, these are early warning mechanisms because the thing with Nigeria's economy is it's dependent on a single commodity, which would be oil. So the government accounts for about 80% of its revenue from oil-related income. So when you have this situation in Nigeria where the new administration took office, the oil price was sitting at about $100 and it dipped to a low of $37 and now it's oscillating around $45 to $50. So these are the type of things that then affect Nigeria when they removed the fuel subsidy earlier this year. The price of food has gone up quite substantially. Inflation is sitting at 17%. The unemployment has doubled from 6.3% to about 13%. So you're faced with a lot of economic problems that are out of the control of the government really, but more a sign of the times.
But then why is it difficult for countries like Nigeria to actually diversify their economies? I mean, it's dependent only on one sector.
Yeah, so Nigeria's got a lot of sectors that have huge potential. Construction, real estate, agriculture is quite a big employer in the Nigerian economy. But the one thing is they suffered from is the Dutch disease, where you've got a single commodity that contributes most to most of government's revenue, and there's no ability to then diversify because that single commodity, when prices are doing well, it strengthens your currency and things are looking good. You can spend a lot more on healthcare, education, but you're then exposed to the volatility of that commodity. So in this case, it's oil, and oil has hit some fresh lows this year and also late last year. So the Nigerian government is suffering because of that, but they have other sectors that they should grow. The potential is
there, it's just not being exploited enough.
That's right.
All right, so do we perhaps know how long will it take for this recession?
So it's hit 0.4, it lost 0.4% first quarter, and then it's lost 2% for the second quarter of 2016. The global environment is not looking as good as it used to. So the Nigerian government has to and the Nigerian economy is also going to be victim to global events. We saw Brexit happen and a lot of money was wiped off global financial markets. You've also got the US Fed, which is going to look to hike rates, where you could start to see a stronger dollar. And for a country like Nigeria, where they import a lot of goods, that's really going to hurt business. It's going to increase the cost of the imports, and generally the consumer ends up suffering.
Yeah. Now, I was also looking at the fact that the Minister of International Development from the United Kingdom is actually visiting Nigeria at this current moment. They're looking into seeing how best they can help Nigeria to get out of this situation. Talk to us about the strong link and the friendship between Nigeria and the UK.
Yeah, so with the UK and Nigeria, as you know, Nigeria was a colonial post for the UK, so they do have quite good ties. The Nigerian government and administration has gone there to try to get some funds that they believe were stolen from the economy and repatriate those funds back. But the relationship will continue in an amicable manner. They've got a new trading partner outside of the EU now with the UK. But the one thing that the administration is looking to do is they're looking to borrow a lot of funds from foreign investors in order to fund the budget deficit. So with government bonds in Nigeria, they're paying about 14% at the moment. The government yields are sitting 13, 14%. So I don't think it's a good mechanism to start borrowing because when you're servicing such high interest and your main source of income is very low or is compromised, it's not a good idea to be borrowing. But that's the route that they've chosen.
All right.
Yeah.
Now, just to bring it here in South Africa, I mean, we've recently seen the Reserve Bank of South Africa announcing a 0% growth. Are we too far from that? Just a quick one on this.
Yeah, so South Africa is also heading for a recession. We also contracted 1.2% on an annualized basis. The one thing about South Africa is we can't afford to go into recession when we've got such high unemployment. So we need to add a lot more jobs to the economy. If things do work out with the United States and they end up having a strong dollar by increased interest rates, we could see the economy suffering even more.
All right, Maurice, that's where you're going to leave it for this morning, but thank you so much for your insight.
Yeah, thanks for having me.
Thank you very much indeed. There you have it. That's Maurice Madiba. He is the founding director of Cloud Atlas Investing, talking to us about the economic part of things in Nigeria.